Barings Bank was not just a bank, it was old money with a building attached. Founded in 1762, it survived wars, empires, revolutions, crashes, and generations of financial panic. This was the kind of institution that looked too respectable to fail. Barings financed major pieces of history. It helped fund the Louisiana Purchase, supported governments, served elite families, and built a reputation so powerful that people treated it like financial royalty. For more than 2 centuries, Barings looked untouchable. It had prestige, connections, tradition, and a reputation polished by time. Then one working-class trader walked into the story and turned that reputation into rubble. His name was Nick Leeson. He was not born into privilege. No Oxford, no Cambridge, no family banking dynasty. He grew up in Watford in a working-class home, the son of a plasterer and a nurse. But Nick had something the old banking class underestimated: hunger. He wanted money, status, and the kind of life that made people stop asking where you came from. In the late 1980s, finance was changing, markets were deregulating, trading floors were getting louder, faster, and richer. For ambitious young men without old money connections, the market looked like a shortcut. Nick started in the back office at Morgan Stanley. Not glamorous, not powerful, mostly paperwork, settlements, and making sure trades actually matched the records. But that boring job taught him something dangerous. He learned how the plumbing of finance worked, not the flashy part, the hidden part, the part where trades are checked, confirmed, reconciled, and either approved or rejected. When Morgan Stanley would not promote him to the trading floor, Nick left. Then Barings Bank hired him. The old empire thought it was getting a hard-working operations guy. It was actually giving a future disaster access to the controls. By 1992, Barings sent him to Singapore to run a new futures and options operation. He was only 25 years old. A 233-year-old bank had just handed a young, cocky trader the keys to a high-risk machine. Welcome to CIMEX, the Singapore International Monetary Exchange. This was not quiet finance. This was a financial boxing ring. Traders screamed, pushed, signaled, sweated, and fought for tiny price differences worth millions. Nick loved it. He was no longer a back-office clerk. He was in the arena, trading futures linked to the Nikkei 225, Japan's major stock market index. And for a while, he looked like a genius. The official strategy sounded safe. Barings was supposed to profit from tiny price differences between markets in Singapore and Osaka. Buy in one place, sell in another, collect the spread. Boring on paper, powerful at scale. But Barings made a decision so reckless it almost sounds fictional. They let Nick run the front office where trades were made and the back office where those same trades were checked. That breaks the golden rule of banking control. The trader and the checker cannot be the same person. That is like letting the football player score the goal, blow the whistle, update the scoreboard, and investigate himself. But Barings trusted him. He was energetic. He sounded confident. He sent back profits. London liked the numbers, and when the numbers look good, powerful people often stop asking basic questions. This is where the story stops being funny, because Nick had not just been given a job. He had been given a loophole, and loopholes in finance are like unlocked doors in a bank vault. Soon, small mistakes began to appear. Trading errors, losses, problems that should have been reported, corrected, and contained. But Nick had a different idea. He hid them. To hide those losses, he used an account that would become infamous. Account 88888. Officially, it was supposed to be an error account. In reality, it became a financial black hole. At first, the losses were manageable, embarrassing, but survivable. This was the moment where honesty could have saved everything. Instead, Nick chose the most dangerous sentence in finance. I can make it back. This is how financial disasters grow. Not usually from one giant evil plan. They grow from one small lie, followed by a second lie to protect the first one, then a third lie to protect both. Nick started placing unauthorized trades, bigger trades, riskier trades, trades that were not about tiny arbitrage profits anymore. He was now betting on the direction of the market and hiding the losses when he was wrong. The more he lost, the more he bet. That is not strategy. That is gambling with a bank's money while wearing a trader's jacket. But in London, Barings saw profits. Nick reported strong results from his visible accounts while hiding the ugly side inside 88888. He looked like a star. The bank treated him like one. This is one of the oldest traps in business. When someone makes you money, you stop asking how. The results become a sedative. The profit becomes the blindfold. Nick also had a personality that fit the fantasy. Confident, aggressive, working-class outsider. The guy who looked like he was beating the old system at its own game. But the truth was much uglier. Every hidden loss increased pressure. Every pressure created bigger bets. Every bigger bet made the lie harder to confess. Nick was not escaping the hole. He was digging faster. The secret account became a garbage dump for reality. Bad trades went in. Fake explanations came out. And because Nick controlled both the trading and the paperwork, the system kept accepting the illusion. London should have noticed. The cash requests were huge. The explanations were strange. The risk controls were weak. But prestigious institutions often make a deadly mistake. They confuse reputation with supervision. Barings was not destroyed because nobody had a rulebook. It was destroyed because the rulebook sat on the shelf while one man did everything the rules were designed to prevent. By 1994, the hidden losses were no longer small. They were monstrous. But Nick kept sending London a beautiful story. Profits, growth, genius, and control. The bank believed him because believing him was comfortable. Doubting him would mean admitting the Singapore operation was dangerously out of control. And comfort is expensive when reality is charging interest. Nick's main bet became brutally simple. He needed the Japanese market to stay stable or rise. If the Nikkei behaved, he could keep pretending. If it collapsed, the truth would come for him. This is the nightmare of doubling down. A small loss becomes a bigger bet. The bigger bet becomes a bigger loss. Then the trader convinces himself the next move will finally fix everything. But markets do not care about your desperation. They do not care that you need one lucky bounce. They do not care that confession would ruin your career. The market just moves. Meanwhile, Nick's reported profits made him famous inside Barings. He was seen as the young trading wizard in Singapore. The bank even paid him bonuses while the hidden hole under his desk kept growing. This is what makes the Barings story so insane. The bank was rewarding the man who was secretly destroying it. It was not just a failure of trading. It was a failure of management, culture, and control. And because the Singapore office seemed successful, London gave it even more room, more confidence, more funding, more trust. Exactly the things a hidden disaster needs to grow. A proper control system would have separated duties. One team trades, another team checks. A third team monitors risk. But Barings had created a system where the alarm was controlled by the fire. The warning signs kept flashing. Large cash transfers, strange balances, missing documentation, questions from auditors. But every warning was either misunderstood, delayed, or explained away. This is the key suspense. Nick did not need to fool the whole world. He only needed to fool a control system that was already broken. By early 1995, the hidden losses were massive and Nick was running out of road. He needed the market to move in his favor quickly. Instead, history delivered the worst possible shock. On January 17, 1995, the Kobe earthquake struck Japan. It was a human tragedy first, but it also sent shockwaves through Japanese markets. The Nikkei fell, and Nick's hidden bets began exploding. This was the moment the market stopped cooperating with the lie. Nick had bet heavily on stability and recovery. But after Kobe, volatility surged. Prices moved against him, and the losses became impossible to hide. A rational trader would cut the position. A desperate trader does the opposite. Nick increased his bets, trying to push back against reality with more borrowed courage and more hidden risk. This is the most dangerous moment in any loss spiral. The trader stops trying to make money and starts trying to erase the past. But the past does not erase. It compounds. As the losses grew, Nick's requests for cash became impossible to ignore. Barings kept sending money to Singapore without truly understanding that it was not funding profits, it was feeding a fire. By February 1995, the game was over. The losses were too large. The paperwork could no longer save him. The black hole had grown bigger than the bank itself. Nick left a note that reportedly said, "I'm sorry." Then he fled Singapore with his wife. Behind him was not just a bad trade, it was the wreckage of a 233-year-old institution. When Barings finally opened the books, the truth was catastrophic. Nick's losses totaled around £827 million, more than enough to destroy the bank's capital base. Think about the absurdity. One trader, operating from one office using one hidden account, created losses so large that a bank older than the United States could not survive them. And this is why the story is so famous. It feels impossible, it feels cartoonish, but it happened because the basic controls that should have prevented it were either missing, ignored, or trusted to the wrong person. On February 26, 1995, Barings collapsed. A bank founded before the steam engine became common, before modern stock exchanges matured, before most modern nations existed, was killed by modern derivatives and ancient arrogance. The next day, the unthinkable happened. Barings was sold to ING for £1. £1. A bank that once financed empires was reduced to the price of a cheap sandwich. Nick Leeson was eventually arrested in Germany, extradited to Singapore, and sentenced to prison. The trader who wanted status and freedom ended up behind bars because he could not admit a loss early. That is the personal tragedy of the story. But the institutional tragedy is bigger. Barings did not just have a rogue trader problem, it had a system problem, because if one person can destroy your bank is already badly designed. A strong institution does not depend on one man's honesty. It depends on systems that work even when people fail. Lesson 1. Separate the front office from the back office. Traders should trade, operations should verify. Risk managers should challenge both. If the same person does everything, the system is not efficient. It is blind. Lesson 2. Beware of star employees who are too profitable to question. The more magical someone's results look, the more aggressively the organization should verify them. Lesson 3. Small losses become fatal when ego gets involved. The first loss is usually survivable. The cover-up is what starts sharpening the knife. Lesson 4. Complexity is not a substitute for control. Futures, options, arbitrage, and derivatives may sound sophisticated, but sophistication without supervision is just danger wearing a suit. Lesson 5. Prestige can be a sedative. Barings was old, respected, and connected, but history does not protect you from bad controls. A 233-year reputation can still be destroyed by one unchecked account. And maybe the biggest lesson is this: financial collapse often starts boring. A missing document, a strange balance, a small loss, a manager who assumes someone else checked it. Then one day, the boring thing becomes the headline, the hidden account becomes the scandal, the small lie becomes the collapse, and everyone asks how nobody saw it coming. The truth is, people did see pieces of it. They saw cash requests, they saw inconsistencies, they saw risk. But seeing a red flag is useless if your culture is trained to explain it away. That is why Barings still matters today. It is not just a 1990s trading scandal. It is a warning about every company that gives power without oversight, rewards results without verification, and mistakes confidence for competence. Because Nick Leeson did not beat Barings with genius. He beat Barings with access. Access to trades, access to records, access to a hidden account. And access without control is a loaded weapon. The comedy is that the setup sounds ridiculous. The tragedy is that it was real. One man was allowed to mark his own homework, hide his own mistakes, and keep playing with the bank's money. And the scary part is that every generation thinks it is smarter than the last, better computers, better dashboards, better models, but bad incentives and weak controls can still turn smart systems into expensive disasters. Barings survived Napoleon, wars, market crashes, and centuries of financial change, but it could not survive its own arrogance. That is the brutal punchline. A bank that once financed empires was not destroyed by an army, a revolution, or a depression. It was destroyed by paperwork nobody checked, losses nobody admitted, and a trader nobody controlled. That is the real story of Nick Leeson and Barings Bank. Not just a rogue trader story, a system failure story, a culture failure story, a reminder that in finance the most dangerous person is often the one nobody is checking. So the next time you hear about a star trader, a miracle profit engine, or a financial genius nobody fully understands, ask the boring questions first. Who checks the trades? Who controls the cash? Who verifies the story? Because if the answer is the same person, you are not looking at genius. You are looking at a disaster waiting for a market shock. What do you think? Was Nick Leeson the villain, the symptom, or just the man Barings allowed to become too powerful? Drop your thoughts in the comments. And if you enjoyed this breakdown of how one man destroyed a 233-year-old bank, hit subscribe for more 2D finance documentaries, and I will see you in the next one. If you enjoyed the story of one man destroyed a 233-year-old bank, then you'll love the story of how Amazon almost went bankrupt. Click the video on your screen now. I'll see you there.